The calculation that goes into the cost of your car insurance may be pretty discriminatory and go against you as an African American or someone that has less income. There's a lot of different factors that many articles have stated that when we start to introduce AI, artificial intelligence, into the insurance industry, that it's going to make it worse for someone that isn't financially stable. There's a lot of programs that the government has implemented in many different states that offer what's called a basic insurance policy. In Michigan, we have something called the Michigan Basic. And that's something where if you can't afford insurance or can't get insurance anywhere else, maybe due to your driving history, due to lack of income and be able to pay the bill, there's different base policies. Now, don't get me wrong, those aren't necessarily cheaper policies. In some cases, they're more expensive. But if you're getting some sort of an assistance, then that might pay those extra costs. By the way, you can do that with any company. It's just more of a hassle. So taking the hassle out of your hands, is it worth that case? So let's dive in and find out what are the factors that create what AI could amplify to be a negative cost on the cost of insurance. For those of you that have seen a rate increase, we've seen an average of 12% in 2025 alone. Now that's not all companies. I've actually seen some companies go down several percent in cost of car insurance. Here's what happened in the last 3 years. We've had 30 to 40% increases almost 2 years in a row. So you're probably paying 30 to 60%, if not more, with other companies for the same policy that you've had. And it wasn't anything to do with you. Your credit score didn't change, your car didn't change, your living location didn't change. All of the things may have stayed the same, but because these larger companies have taken on too much risk, they're starting to pay out too many claims, and that doesn't work well for a business. They have to have some sort of growth model, and some of them have actually gone bankrupt. There's a fear out there with that portion of it. So it's understandable that you're going to see a little bit of a rate increase. That going forward, the people that have gone up 12% were the ones that didn't go up the 30, 40% in the previous times. That means you've probably stuck with a company that had a really good rate, but comparable to other companies seeing these 30, 40, 50% increases, that was fine. They maybe went up 3, 4%. They quickly realized that wasn't enough to keep them stable, and they were starting to lose that traction of if there was too many claims, they could go insolvent. So they had to start increasing that additional 12% going into 2025, probably a little bit less, but close to for some companies going into 2026. So when you take all of that data and you put in some sort of AI tracking and they start to research this, you're going to find that it's going to amplify what has been a problem. You'll see a lot of articles talk about zip codes are not being rated correctly. They're wrong. They're an unfair way to rate policies. And the government actually agrees with you there. They have created what's called territories. So they've taken many zip codes and lumped them into one territory to where if somebody was in a good territory and they're paying less for the insurance, but they're near a bad territory and they're paying a lot more, they're lumping them into one. So there's an average cross across the board. It's a little bit fair. The unfortunate part is not all companies have shifted to the territories yet. But on top of that, that doesn't stop the fact that your worst territories we're already paying 12 to 15%, sometimes $1,700 more per year for the same policy in a wealthier neighborhood. Now, there is a reasoning behind that because those territories that were in wealthier neighborhoods had less crime, had less claims. That doesn't mean they're better drivers, but in general, the insurance company did not have to pay out as much as in the urban neighborhoods. And that urban neighborhood had a lot more theft, a lot more claims, a lot more medical injuries. That's probably the bigger piece of those. That's where you're going to see that price increase more and more over time, where those territories are starting to become mediocre territories, where you're still going to pay more at the lower end and you're going to pay less at the higher end, but in total, it's going to be combined. So when you're in a not so great territory, how do you fight that risk? They've implemented something called a telematics, and you're giving up your data for 90 days in most cases. Sometimes they're longer than that, depending on the company. That's where you want to talk to your local agent. And you're able to show your driving habits. If you can show that you're not driving 50 million miles a year, you're not accelerating super fast, you're not decelerating or braking too fast, your average driving history is good, companies will give you those additional discounts that those higher tiered customers were already getting. So you can lower that. The cool part is, even if you're in a better territory, you still have the option for that as well. So if you want to lower the cost of your insurance, you can also show that you're a good driver and lower the rate because of you specifically, not the location that you're in. But Mark, that's still unfair. Why do I have to prove that I'm a good driver because I want a better deal? That's unfortunately just the way that insurance has become. If you look back at the original start of insurance, and most of these companies had really good intention. They had you purchase a policy. If you didn't have claims, we were good. We'd have profit. We'd start making money. We'd start giving money back, some companies did, and then we would be a good overall fit. There's a lot of fraud that started to play cases, and that's where AI is starting to eliminate that, and that's going to help us with prices there. And there's a lot of issues that people started having. People were claiming claims for no reason under the sun, and they just thought every insurance should be claimed upon. That created a big spiral, in my opinion, that caused those rates to slowly change and the risk to change. And by doing so, it caused a lot more underwriting, where the underwriter had to go in and say, wait a minute, these are the zones we're having problems with. We need to price ourselves so that we're not competitive with your really good companies. And that allowed the cheaper company, or the less expensive, which usually had a lower rating satisfaction-wise, come in and take that business. They almost wanted that business to leave, and it turned into what we now know as more of that discrimination piece. They blocked off all of these territories or zip codes at the time and said, those are not the ones we want to touch. And it's true, they don't want to touch them. If they had the option and the government didn't require them to offer insurance in certain zip codes, they would eliminate them altogether to where it wasn't an option. The beauty of that is, because you're allowed to go with any company, you have what's called an independent agent. Those are people that can shop with multiple companies. So if Progressive's not competitive, maybe Nationwide is. If Nationwide isn't, maybe Safeco or Liberty Mutual or Allstate, or now Geico is starting to enter the market. You have these agents that can locally check all of these carriers within just a couple clicks of buttons. They can look at the coverages, make sure it's the best fit, and then get you the best policy because they know the profile or the location, and they can help you get that better rate. If you are shopping and looking for insurance and you want to work with an independent agent, I've collected a majority of them. I've put a link in the description below where you can start a quote with a local independent agent that can help shop through those options. The bigger thing is, I don't think this is ever going to be fixed. I think AI is going to amplify it, and we are going to see some companies that have old data that is probably discriminatory, which is not meant to be, but because no one's going to siphon through that old data, some of these algorithms are going to pick up what trends look like, and they weren't supposed to be trends. They were issues that states or companies did not want to insure certain areas, and it created this whole algorithm, and the AI is going to assume it's the typical platform. When it gets the wrong data, it's going to give the wrong solution, which is going to cause a lawsuit, in all honesty, and it's going to happen. And if a company does it, it's on them. They have to siphon and work through the data. Personal opinion, I think they need to start over. I think they need to eliminate the majority, or at least cut back after 3 years, because I think in the last 3 years it's gotten better. And if that's the case, they need to get rid of the past data. It sucks because insurance companies are all about collecting data. That's how they know their prices are competitive, because they do something called the law of large numbers. When they have millions of people to insure, they know the average cost of what location, what car, what typical credit score, what all of these things that create that profile where you fit. That's why those independent agents can take that profile and find the companies that are the better fit, because they have those laws that they're able to pull in and say, this is a better cost because this is a better fit for this type of person. Now, that doesn't mean the agent is going to say, hey, you could pay an extra $10 a month or whatever the cost is and go with this better company that will long-term create that better fit for you. Once you've been 5-6 years with this company, you're going to have a lot more options. If you have a major claim, there's accident forgiveness, all of these bundles, these pieces that you may want to have that company B didn't offer for you. So let me know what your thoughts are. Do you think that it is going to be a huge discriminatory problem? Do you think that I'm correct when I think there's going to be a major lawsuit because of this, when AI starts to pull the data from all of these major insurance carriers and mix them together? I do think that it's going to grab some old unrelated data that shouldn't have been in there. At least one company or a few companies may have that happen. Or do you think that they're going to be able to clean it up? Do you think there should be a law that says you can't take the data from this date going forward, or if there's a suit, then X, Y, and Z. Let me know what your thoughts are in the comments below. I'm Mark with Think Insurance. I'll see you in the next one.